In our today's video we are going to learn, why is peer-to-peer lending rising and how can we make money in this? So let's go. Peer-to-peer, P2P, lending is rising in popularity for several reasons. 1. Access to credit. P2P lending platforms provide an alternative source of credit for borrowers who may not qualify for traditional bank loans due to limited credit history or other reasons. 2. Higher returns for investors. P2P lending offers potentially higher returns compared to traditional savings accounts or some other low-risk investments. Investors can earn interest by lending money directly to individual borrowers. 3. Ease of use. P2P lending platforms are generally easy to use, with streamlined online processes that allow both borrowers and investors to participate from the comfort of their homes. 4. Diversification. P2P lending allows investors to diversify their portfolios by lending to multiple borrowers across different risk profiles, potentially reducing overall investment risk. To make money in P2P lending, investors can follow these steps. 1. Research P2P platforms. Investigate different P2P lending platforms to find reputable and regulated ones. Look into their track record, borrower screening processes, default rates, and fees. 2. Assess risk tolerance. Understand the risks involved in P2P lending, including the possibility of borrower defaults. Assess your risk tolerance and allocate only a portion of your investment capital to P2P lending. 3. Diversify investments. Spread your investment across multiple borrowers and loan types. By diversifying, you can mitigate the impact of potential defaults and improve the overall stability of your P2P lending portfolio. 4. Understand loan terms. Carefully review loan terms and borrower profiles before lending money. Pay attention to the interest rates, repayment periods, and the purpose of the loan. 5. Consider loan grades. Many P2P platforms assign loan grades based on the creditworthiness of borrowers. Higher grades indicate lower risk but may offer lower returns. Understand the trade-offs between risk and reward. 6. Reinvest earnings. As borrowers repay their loans, consider reinvesting the principal and interest earned into new loans. Reinvesting can compound your returns over time. 7. Monitor and adjust. Regularly monitor your P2P lending portfolio. Be prepared to adjust your investment strategy based on the performance of loans and changes in the market. 8. Manage risk. Be aware that P2P lending carries inherent risks, and not all loans may be repaid. Set realistic return expectations and avoid overexposing yourself to P2P lending compared to your overall investment portfolio. It's essential to approach P2P lending with a balanced perspective. While it can offer attractive returns, it also involves high risks compared to traditional investments like stocks or bonds. Investors should carefully consider their financial goals, risk tolerance, and the amount of money they can afford to allocate to P2P lending. Consulting with a financial advisor can provide valuable insights and help make informed investment decisions. If you learned something valuable from this video, make sure to press the like button and hit that subscribe button.